Hi guys, how you doing? Piotr here, this is LiteFinance Global YouTube channel and it's my pleasure to be with you today again. We are going to make the FX market update with the very interesting week ahead, and I've prepared few very interesting charts for you, more details on my left side. So without further ado, let's jump straight into the video. Welcome back to the channel. Today we are not going to talk about the super majors. We are going to talk about a little bit different FX pairs. Let's start with the dollar Swiss franc here. And the most important thing, we are approaching possible strong demand zone where the stops are below 87.50, and you know the stops and reverse, usually that's what's changing the market direction, right? Especially that if we are going to take into the consideration how the market is behaving lately, so trying to make it as a equal waves is gonna to bring us probably into that level. So that's what we are looking for some kind of the stops to the downside. Already dollar Swiss franc is down more 10% after the failure around double top, and that's what I'm talking about when saying stops are reversing the direction, all right? And we've seen the strong move to the downside. So as of now, if you are a bull, when it comes to the dollar Swiss franc, you are looking for the stop count and reversal below 87.50, like this, for example, all right? That's the stop count, quick reverse to the upside. Maybe we are going to take out some supply retest and continuation to the upside. Now, how high can we go? Well, a very good question, and as usual, very easy answer. I'm trying to make it for you. So if that's some kind of the consolidation, we might look for this broken swing over here. In that case, we are talking about the levels close to 91.50, 92. If you are going to make the same measure to the downside from that consolidation, right, you've got your level of the possible stop count with eventually reversing. So if you are a seller, you are looking for the possible short setup based on the daily chart around 91.50 or above. If you are a buyer, you are looking for stop count below 87.50, some kind of the reversal and moving higher. So that's how I see the things related to dollar Swiss franc. Over to the next one is a USDCAD, and well, the neighbors based on this daily chart, they are trading here within some nice trading range. So in case of the downside break, of course, we are going to see a possible move back towards 127, 126.50. Let me place the line over here. So it's going to be the mid of that previous range, all right, retest as we've seen already here. But in case of the upside break, we are talking about the levels close to 145. So as of now, we are, as you can see, we are trading in the middle of the nowhere. We can call it no man's land. So from that perspective, based on this daily chart, as of now, looking to sell the rallies, looking to buy the dips, trying to trade the range, unless we are going to break that range, right? So we are talking about the possible selling around somewhere close to 139, and looking to buy somewhere close to 130 to 40, 132. And now, in case of the upside break, you don't want to chase the prices. You want to see the pullback, strong pullback, and then move towards 145. The same with the downside break. You don't want to chase the breakdown because you don't know if it's a fake or real. You want to see the rally and you want to sell into the rally with the lower target. So that's the things related to USDCAD with all the levels. Aussie USD. Well, the thing is that after big Niagara fall, right, and then reverse some kind of the V formation, some may wanna call the possible inverted head and shoulder, and that could be the case over here. But if we are talking about this possible inverted head and shoulder, then the very important level is around 71.50. So based on this setup, we already know where we have the possible supply, because if we are going to play out this combination, right, then there is a really big possible move to the upside, trying to fulfill the head and shoulder formation. In that case, we are talking about the possible 80, right, taking out all the stops we've seen on this daily chart to the left side. So 71.50 is a crucial, and if you wanna try to play out this possible inverted head and shoulders, then you are looking for the level close to 66 as a buying. On the other hand, it could be just the range we've seen lately. So with that being said, 70 might be the target to the downside, somewhere close to 64, 63, 50. If we are going to take into the consideration only this latest range, but of course, medium and long-term players, I think are going to watch for this possible inverted head and shoulder. So 71.50 might be the key, and if you are aggressive, the 66, 65, 50 is where you are trying to position yourself with this possible upside move. Again, in case of the downside break, we have this weakness, that's why we are trying to hold. But if you are going to break lower, then the stops down towards 64.50, 64 could be the name of the game for the Aussie versus US dollar. Over to the next one. Right now we are going to switch to Euro Pound, all right, daily chart. That's the daily chart of the Euro Pound. And again, some stops to the upside been taken, all right. Some stops based on this daily chart to the downside been taken. Where we are currently, where we are trying to consolidate with this latest central bankers action, and we are trying as a market trying to figure it out what the next things might happen. So lately, as you can see, let's make it, let's zoom in a bit. Okay, so lately, after the Bank of England hike, we've seen the downside break and retest. All right, so if that's the case, so let's have a look what is the downside target. Okay, the downside target here, based on this consolidation, we are talking about the levels close to the next bottom of the previous consolidation, where we have plenty of possible stops. In that case, we are talking about the levels close to 85.50, 85. That's where, from the medium-term perspective, you may want to look this level as a buying opportunity. As of now, 1, 2, 3, 50% of that range could be the selling opportunity. We are talking about the levels close to 88.50 with the very tight stop above 87 and targeting the levels we discussed a second ago below 86. So that's the euro pound. And finally, let's have a look what we have when it comes to the Aussie Kiwi. Okay, and well, we are still fighting very close to parity based on the price action we already seen quite a few times. The market is really trying to hold 106, 106.50. Let's place the line over here. All right, and with the current price action, I see the pullback, all right, tiny pullback as the possible buying opportunity with the stop below the lower shadows, and targeting the previous supply. In that case, we are talking about the levels close to 109.50, 110. So the risk-reward ratio is going to be in your favor. So guys, as usual, please do your own research, do your own homework. It's not the holy grail, it's the FX market. Stay safe, wish you great next trading session. See you around, take care and goodbye.